After the real estate market took off in 2016, countless families have been striving to save up for a down payment on a home. Once they've managed to scrape together the initial payment and purchase a home, they find themselves burdened with a mortgage. Fortunately, during those years, despite high interest rates on loans, housing prices were soaring, leading many to overlook the weight of their mortgage obligations. It wasn't until the real estate market took a downturn in recent years that people began to realize the impact of their mortgages. Many families with some effort could actually come up with the down payment for a local property. Concerns then shifted to whether they could afford the regular monthly payments, and the prospect of being Erica's mortgage slaveless for 30 years. Overall, people started to value their money more seriously. However, for 99% of individuals, when it comes to taking out millions in loans for a home purchase, they are in a state of numbness, never having shouldered such a large debt nor borrowed such a substantial sum before. Banks, on the other hand, have a keen understanding of the psyche of the Chinese people. The average person has little concept of large numbers that exceed their daily lives. For someone living in a small town, daily expenses might include meals, groceries, and occasional entertainment like watching a movie. Their largest income is a monthly salary of a few thousand, and their biggest expense might be a smartphone costing a few thousand or a car worth a few tens of thousands. For example, a person earning $5,000 a month measures the cost of everything they need to buy as a fraction of their monthly salary, which makes it easy to disregard a few cents. But be particular about a $3 to $5 delivery fee for a single takeout order. When it comes to purchasing a piece of clothing for a few $100s on an e-commerce platform without free shipping, they will also be particular. Based on their lifestyle, they can fully understand what a few dollars mean to them. However, when it comes to a product priced beyond their salary, they actually have some cognitive difficulty. For instance, when buying a motorcycle, they might consider two options, one priced at $20,000 and another at $18,000, a difference of just $2,000. Yet this difference might not be as palpable to them as the delivery fee for a takeout order, because the $20,000 and $18,000 price tags exceed the numerical cognition they have built over the years of their lives. This leads them to not clearly recognize what such a large number means. Often at this point, the opinion of a salesperson at a motorcycle store becomes very referential. For example, the salesperson might say the $20,000 motorcycle has been out for only half a year and is now on sale with 20% discount, among other persuasive phrases. Under such influence, they might overlook the $2,000 difference and opt for the $20,000 motorcycle. This is not wrong, series. It's just that their decision-making process has become irrational. This is just for a $20,000 motorcycle when we found out the numbers by a factor of 100 to 2 million mortgage. Most people are essentially bewildered by such figure. Take, for example, a friend working in Beijing, earning a monthly salary of $20,000. After a year, excluding family expenses, they can save $100,000. After saving for a few years and gathering some funds to buy a home, they might not have a clear understanding of the difference between a $3 million and a $5 million home. They are unclear about what $3 million represents or $5 million, and thus they have no concept of whether a 25-year or 30-year mortgage is better. The time span completely exceeds their cognition. Professional research and analysis suggests that ordinary people can only understand events that happen within 1 to 3 years. To understand events within 5 to 10 years is not common. You can reflect on whether you are an ordinary person or not. Therefore, for most ordinary people, buying a home is just about gathering enough for the down payment, as if the remaining 70% of the mortgage issue does not exist. Recently, when Beijing reduced the down payment ratio for first homes to 20%, the number of house viewings and transactions suddenly increased. These people believe that a lower down payment ratio is a signal to rush in and buy a house. After buying, they pay off the mortgage on time for the first few years and gradually begin to understand the implications of a mortgage. A while ago, it was popular to pay off mortgages early, and many with spare money did so, only to realize that after paying for several years, most of it went towards interest, with only a small portion going towards the principal. It is at this point that they slowly gain some cognition about mortgages. A few years later, as they age with elderly family members and children to care for, and a mortgage to pay off, the pressure becomes even greater. The economic environment worsens, and several colleagues from the same department are laid off. One person ends up doing the work of several without complaint, fearing dismissal. This is the fate of the majority of middle-aged salaried workers. Because of mortgages, many things have become different. To some extent, we should be grateful that the 3-year pandemic has changed many people's perceptions of mortgages. However, many are already on the train and can only shake their heads in helpless regret. Although real estate in China remains a pillar industry for the nation, its development is finally entering the second half. Banks and the state are working together to ensure a soft landing for systemic financial risks, which falls on the shoulders of every young person carrying a mortgage. The state thanks you for taking over, and the banks thank you for taking over. Thus, 99% of those with mortgages do not truly understand what it means to carry a mortgage and have hastily boarded the train. Now that housing prices have taken a roller coaster ride and are beginning to plunge, they realize they are trapped. Reflecting on how much one can save in a year or a lifetime, and realizing it all goes towards the mortgage, one must ask goals, are you willing to be a lifelong mortgage slave?